So at any point in time, the market has a reality to its position, right? As an example, let me draw this out for you. Let's just say we have a market that's done this. And that's, here, let's do a little more. And let's say that's the total position of the market. And I'm not purposely drawing a wedge or anything, okay? So just take that off the table. But let's just say this is where it is. In reality, not necessarily what you and I know about the market, but in the reality, the market is expressing an actual total position that it has. And that position indicates what is likely going to be next for the market. Maybe that is something like this, okay? So at this point, you can't say for sure that this is going to happen, but you might be able to say with a very high degree of certainty that that's going to happen because you've understood its actual position. Or maybe the market has done this. And you might think, well, they're doing really well, but its real position is that it's done on the upside and it's going to go do this. That could be its real position. That knowledge that this is likely what's going to happen is not necessarily going to be contained on your indicators or on a candlestick pattern or anything like that. The total position of the market is what gives you that information. Just like if I want to know what the ocean is likely going to do, it would be a good idea to look a little beyond a 10 by 10 area of the ocean, right? If I'm looking at a 10 by 10 area of the ocean and I'm saying I want to know what the ocean's going to do, a lot of the information about what the ocean's going to do is not contained in that 10 by 10 area. You're not going to find the information in that 10 by 10 area. So it's the same with the markets. This is why I've said before that while I love the kind of the, I don't know what the word is, not the romance, but the, you know, the beauty of candlesticks and the idea that, you know, historical nature of them and how rice traders use them and all this other stuff, that, and they ascribed meanings to them, and they were very astute in doing so. And I give them all the credit for that. But they're nearly meaningless unless you understand the total position of the market. So one price bar or two price bars don't speak for the whole market. Now, if you've understood the total position of the market or a good portion of the market position, then those could be useful to you. If the total, or, you know, mostly total position of the market is talking about the market needs to go down, and then you get your candlestick pattern, that's great. That would be helpful. But the right order is to understand the total position of the market first, then understand what the shorter term indications might be pointing to, because those shorter term indications do not speak for the total position of the market. You and I don't speak for the entire universe, right? We're smaller and we're a partial position of the total universe. We don't speak for, nor do we direct the activities of the total universe. So if you want to know what's likely going to happen in the market, you're going to have to go beyond 10 by 10 and beyond individual indications which don't speak for the whole. And that's when you get that in your head, you'll start understanding why it is that we focus on certain things regarding the longer term charts, which most people are not interested in because they're down at their 1 minute chart wanting to buy a moving average crossover or whatever they're trying to put together. And you can imagine that that's like looking at a 5 by 5 piece or a 1 by 1 piece, for that matter, of the ocean, trying to understand what the total ocean is going to do.